right. Let me clear my throat. What's happening, y'all? Welcome to the Ironworth Trading Show. I'm your host, Coach Price. This is not financial advice. This is for educational purposes only. Everything I teach you in this live stream tonight is just for educational purposes only. Anything else I say is for entertainment purposes only, okay? So I'm not telling you what to do. I don't know your situation or whatnot, but I do want to tell you what Warren Buffett said over the weekend. It's very important. We're going to talk about some of the macro data that we got coming up ahead. Again, we got a very big earnings season on the way. Well, it is earnings season. So I want to talk about some of the stocks that are about to drop earnings. What's up, y'all? How y'all doing? How are y'all doing? Y'all had a good weekend? Just put the fries in the bag. What up? I'm glad to see you made it to class. What's up? How y'all doing? What up, D? Let me give a few people time to come in. Let's wait to see what's cool. There we go. It's a little warm in here. All right. Share the live out, y'all. Do me the solid one. Share it to anybody you think may need this information tonight or might be interested in this information. But yeah, with that being said, I'll go ahead and start the show. I usually come on at 11, but since it's coming up on 12, I'm not going to hold back. I'm not going to hold no time. So let's get this show on the road. Let's see what we got here. All right. So, welcome back, Ironworth Traders. How y'all doing? Again, I'm Coach Price, and tonight we are doing something serious. All right, again, this is not a recap. I usually give y'all a recap. You know what I'm saying? I'm usually more turned up than this or whatnot, but nonetheless, I want to give y'all this masterclass that I built specifically so that you can walk out of here knowing exactly what's happening in the market this week. I also want you to know why it matters. I don't want to just tell you. I need you to know why what I tell you matters and literally what you are supposed to be looking at as an investor or as a trader. Now, whether you've been trading for 10 years or you just opened up your brokerage account last week, maybe you haven't even opened it yet. Either way it go, I'm going to make sure you overstand and understand every single thing that I put on this screen tonight. Okay? That's my promise to y'all. That is why Ironworth exists. Okay? Y'all with me? Now, before I get into it, let me take my watch off. Before I get into it, I want to say something real quick. It's a lot of people who say they teach trading, and what they actually do is confuse the shit out of you on purpose, right? This they supposed to be teaching you trading, but what they do is confuse the fuck out of you on purpose. Excuse my French. That's just what they do. All right, they throw around a bunch of big words. They show you charts with about 30 indicators on them, and then they charge you to come back and be confused again. Now, that's not what we do here at Ironworth Trading, y'all. When y'all leave my classroom, you're going to leave with clarity, and the only thing you had to pay was attention. All right? Now, you're going to leave knowing what the words mean, what the data say, what the smart money is actually thinking. That is what separates Ironworth from everything else. Now, let's get to work. Did anybody take time? I gave y'all homework. I know a few of y'all wasn't here, but did anybody take time and go and listen to the speech that Warren Buffett gave? Did anybody go and listen to what Warren Buffett said? Or is any of y'all confused about who Warren Buffett is? I know y'all know who Warren Buffett is, so I'll just get started. So look, what dude said over the weekend, it wasn't necessarily something that was going to make everybody excited and geeked up and shit. And it definitely wasn't designed to entertain people who trying to chase money fast. All right. This was a quiet warning. I listened to everything he said and I took notes, but I'm really not going to go over it whole. I'm just going to tell you and I'm going to summarize it. I know y'all like summaries. Y'all like summaries. Y'all want me to say that, like, man, come on. Can you make a long story short? Okay, I got you. He made it clear that a large part of today's market, all right, and again, this is Warren Buffett, one of the best investors of our time. All right, he made it clear that a large part of today's market is starting to drift away from real investing, and it's leaning more towards speculation. What up, Lady C? And I'm noticing that is real. I mean, I can't get people to understand how they need to be investing first and then trading the rest. Invest, then trade the rest. That's how it should be. Okay. Now, where people are no longer focused on value, that's where the problem is going to be. Okay. So right now we got people more focused on movement. They are more focused on speed and being excited. It's a lot of dope heads in the market. And when I say dope head, I'm talking about that dopamine that releases in your brain when you take a trade. All right. They are trading for the speed and the excitement. So when Warren Buffett say that he says the prices will look very silly. Okay. When he say prices will look very silly, in hindsight, he's not guessing. He's speaking from decades of watching cycles repeat. All right. This dude didn't had enough time. What up, Peaches? This dude didn't had enough time to find a pattern. And y'all know trading and investing, this is pattern recognition. Thank you for the follow, Trader Honey. As y'all can see, we hit over 9,000 followers over the weekend. And I appreciate y'all. I couldn't have done it without y'all. All right, so everybody, if y'all could do me a solid one, I'm looking to get to 10K followers. So if y'all new here, hit that follow button right now. Do me a solid one. Hit the follow button. All right, you're not gonna find another live stream like this one. Now, he was basically, this dude been watching the market for years. He done had a chance to learn all the cycles. He knows the pattern. He has recognized the pattern. So he also knows where people get comfortable. He know where people gonna get overconfident and then reckless. So at the same time, Warren Buffett been sitting on hundreds of billions of dollars in cash. Okay. He has not been putting a lot of money into the market. I know because we study what Warren Buffett do. We study what Warren Buffett does. You feel me? He's successful. So if he buys something, everybody try to buy it too, because he's usually right about the shit that he buys. You see what I'm saying? But this the thing, like I said, he been sitting on a lot of money. Not because he's lost his touch, but it's literally because he refuses to force opportunities that are not there. Do y'all understand what I'm saying? He not finna force an opportunity that's not there. That alone should make y'all pause. The greatest investor of our time is essentially saying, I'd rather do nothing than to do something stupid. Do y'all hear that? He a super expert. The expert is saying, I would rather do nothing than to do something stupid. And then the regular people, the retail traders, would rather do something stupid than to do nothing. He said a lot of folk are gambling right now rather than investing. That's what I'm talking about, Peaches. You actually watch. I'm proud of you. So yeah, he said a lot of people are gambling right now rather than investing. You know who he was talking about, Peaches? He was talking about the traders. He's not talking about the people who are adding to their Roth account. He's not talking about the people who are investing for their future, the future version. Tomas and me. Yeah, he talking about the people that's taking their money, they hard-earned money, or maybe it was given to them, whatever. But they trading it for they trading it for emotions, for dopamine. They buying dope. Dopamine, literally. Okay? That feeling you get from trading. And you chasing something that's running from you. Right? Now, again, this goes directly against what most people are doing right now. A lot of people are over trading. They chasing momentum. And they literally treating the market like a place to stay busy instead of a place to be precise. You feel me? Y'all feel me? Put an M in the chat if you get what I'm saying. Put an M in the chat if you get what I'm saying. Okay, lady, get it? Okay, y'all get it. Y'all get what I'm saying? Cool. That's what I like to see. So, he also reinforced something that a lot of traders ignore. So I don't want y'all to ignore it. I want y'all to hear me out, because this is going to help you tremendously. Real wealth is built slowly, ladies and gentlemen. It is built slowly. Real wealth is built slowly. You have to have discipline. I know this shit sound cliche, but I'm serious. You have to have discipline, patience, and positioning. These are the things that are going to bring you real wealth, not constant action. A lot of people say, Coach, are you a full-time trader? And I hate that question. Can somebody tell me how long is a full-time job? Like, when you work somewhere full-time, how long do you spend at that job per day? If somebody asks you, do you do this full-time? What does that really mean? Because I'm not doing shit full-time. Let's be clear. I'm in and out of a trade no longer than an hour. And unless I'm swing trading, okay, that's another story. But as a day trader, I'm not in that shit. Some of us in and out in seconds. I know people that's in a trade and out of trade in under a minute. I won't sit. I'm saying that I after an hour, I'm ready to get the fuck out the trade because of time decay. After 30 minutes, that's a long time. 15 minutes in the trade is a long time. My point is, you do not need constant action. That's my point. So even when he talked about companies like Apple, Warren Buffett, he talked about companies like Apple. He was saying he was talking about leadership and consistency and long-term execution. So if you really listen to everything that Warren Buffett said, the message is very simple, y'all, but it's uncomfortable. You're not going to like it. The market right now is rewarding behavior that historically ends badly. And the people who win long-term are usually the ones who are willing to look wrong in the short term by waiting, sitting in cash, and only acting when the opportunity actually makes sense. That's the gap between being a professional and everybody else. Not intelligence, not how much you know. It ain't got nothing to do with your resources. Literally, y'all, patience and discipline. If you don't understand that, then you are not investing. You just participating. All right. So again, this is Warren Buffett that we're talking about. This is one of the greatest investors in the history of modern finance. The man who turned a failing textile company into a $500 billion empire. Sat down in Omaha, Nebraska in front of nearly 20,000 shareholders, and he handed the keys to Berkshire Hathaway to his successor, Greg Abel. And I hope Greg is able, okay? That's his name, Greg Abel. Now, that is a 150-year event in investing. Now, it don't happen. This type of shit don't happen twice in your lifetime. If you did not pay attention to what this man said this weekend, you are leaving money and knowledge on the table. So that's literally why I wanted to break it down for y'all. All right. So again, for the people in the back who brand new, I'm going to give you 30 seconds. Brett, real quick, break it all the way down. Warren Buffett is 94 years old. Do you hear me? The man that just spoke over the weekend is 94 years old. He took over Berkshire Hathaway in 1965. That's 60 years ago. All right. He turned every dollar that was put in at the beginning into something like $5,000 today. All right. So the S&P 500 over that same period, you would have made about $100 on every dollar invested. Warren Buffett made 50 times that. This is not a lucky man that I'm talking about, y'all. This is a man who understood investing is, important. He understood investing better than anyone else on the planet at the time. And he has been telling us exactly what he thinks for decades for free. Well, let's say it wasn't for free because you did have to pay attention. All right. So in his annual shareholder letters, he give you information. When Warren Buffett says something, as an Ironworth trader, we stop and we fucking listen. All right. So right now, Berkshire Hathaway is sitting on more than $330 billion in cash. That's a lot of fucking money. I want y'all to let that number sit in your brain for a second, because that's more money than a lot of countries got in their national reserve. And the man that's running the company, all right, he was on stage in front of about 20,000 people that he almost spent 10 billion of it He stopped himself because the value was not right. He said, and I want you to hear this clearly, he would spend $100 billion in a heartbeat if the right deal showed up. What is that telling y'all? What do y'all get from that? I want to know, what do y'all think about that? It is telling you that Warren Buffett, with all of that money, with all of that power, he still refused to act when the price was not right. That take a lot of discipline. That is what separates investors from gamblers, y'all. This dude wasn't in a rush. He not chasing momentum. He waiting for value. That is the lesson. That is the lesson. Now, why does this matter to you directly? I know a lot of y'all like, Coach, I don't give a fuck about Warren Buffett. Where the money at? I understand that, but this is where the money is. Even if you have $500 in your trading account and not $500 billion, the principle is identical. The principle is identical. When you have buying power sitting in your account and the market is not giving you value, you don't see your setup. Literally, the correct move for you to do is just to sit the fuck still. Sit down. Be humble. Okay? Sit down. Sit on your hands. The worst thing a new investor does is feel pressure to always be in a goddamn trade. That's the worst thing you can do as a new investor. Warren Buffett got $330 billion mother-loving dollars and he's sitting on his hands. All right, that means cash, holding on to cash is a position. You not buying something is you taking a position. You didn't know that. You not trading is a trade. Cash is not failure. Cash is patience waiting for an opportunity. So I don't know if y'all got to write that down or whatever y'all got to do to remember that, but you need to keep that in your mind. He says something about the cathedral and the casino. This is his most important quote from the weekend. All right, this one I want y'all to spend. I want to spend some real time on this because I think this is the best explanation of the stock market I have ever heard. Okay, and I've been doing this for a minute. So Buffett stood up and said that America is like a magnificent cathedral attached to a massive ass casino. Can you imagine that? A big ass church connected to a casino, right? So the cathedral is the real economy. The companies that build things, hire people, produce goods and services, right? Create real value over time. The casino, aka the stock market, the casino is the stock market. That's where people are running in and out, placing bets, watching ticker symbols, chasing short-term moves, treating investments like scratch-off tickets and shit, right? He said both of them exist in the same structure, and here's the warning that he gave. You have got to make sure that the cathedral gets fed. Meaning, don't forget that underneath all the bullshit, there are real businesses, real earnings, real products, real revenue. That is what you are actually owning when you buy a share of the stock. Are we clear? Put a W in the chat if y'all hear me. I don't think y'all hear me though. Don't let this shit fly over your head, because listen, the future version of you is going to thank the present version of you for paying attention and getting the message. If you still confused about what I just said, let me know. Let me know. I ain't going to leave you behind. Because if you confused, it's 30 other people confused too. They just not saying nothing. All right. So I'm going to say that again. This is not something that you want to ignore. America is like a magnificent church attached to a casino. The church is the real money. Companies that build shit, hire people, produce goods and services, shoes, clothes, cars, all type of shit. It create actual value over time. The casino is the stock market. You want to make sure that you feed in the church. You want to make sure that you actually buying real things, okay? Because when you are speculating, you're not. And this is not something I want y'all to forget. That's why that is why you need to pay attention and build you a portfolio. Now, why does this matter to me and to y'all? Because we do both. We trade stock options, we swing trade, we day trade. We are in and out of positions, but we also invest over here, y'all. We not just traders, we invest. I'm not telling you that trading only is wrong. What I'm telling you is that you need to understand which part of the building that you are in at any given moment, right? Can anybody tell me, or is anybody in the chat still confused about what a leap is? When you trade in stock options, have you ever heard of leaps? Do you know what a leap is? Right? Do you know the difference between a day trade and a swing trade? I'll tell you. The difference is time. The difference between all three is time. A day trade, I'm only in the trade for a day. Swing trade, I'm in the trade for multiple days, maybe weeks, could be even months. Leaps, I'm in the trade for months, maybe even a year, maybe even 2 years. So when you are buying a leaps contract on Apple because you believe in the long term it's going to grow, you believe in the long-term growth of the company, so you bought a leap, right? You are in the cathedral. When you are scalping a 5-minute chart on a meme stock because somebody on Twitter said it was about to go up, you in the casino. All right, both of these moves can make a lot of money, but you need to know which one you're doing, and you do not need to be honest with yourself about not gambling. You need to be honest with yourself. You need to be honest with yourself about gambling. Be honest with yourself about why you're doing it. That way you know you're not gambling. How about that? All right, and again, dude also said, Warren Buffett said that I think it's going to save, what he said, I think it's going to save some of y'all from making a very expensive mistake this week. And I don't want y'all to. So somebody in the crowd asked him about the market's recent turbulence. Somebody that was in the crowd, they was like, man, what's been going on with the market? What do you think about it, right? The pullback that we saw earlier this year, the bear market territory that SPY briefly touched. And he looked at them and said that what happened in the last 30 to 45 days is, quote, really nothing. He said Berkshire's own stock has been cut in half 3 different times during his 60 years of running a company. I'm talking about cut in half, not down 10%, not down 20%, cut completely in half 3 times. And every single time, he did not sell. He bought more. He said if Berkshire fell 50% tomorrow, he would see it as a, and I quote, fantastic opportunity. Do y'all hear me? Let me break that down because I don't think y'all get it. The people who panic sold when SPY pulled back early this year, the people who said that the market is crashing and it's over with, you need to get out, those people are locked in a loss because of their emotions. So he was not moving. He was waiting. Now, I'm not saying you should hold through any drawdown without having a plan. I'm just saying that if your reaction to the market dropping is you being scared as hell and panicking, then you don't got a strategy yet. You got a feeling, right? And the feeling is going to empty out your fucking account. Excuse my French. It's going to actually empty it out faster than a bad trade will. This is why we study. This is why we come to class, right? This is why we have a plan before the market opens, ladies and gentlemen, not while it's moving. No, you don't make a plan while the market is moving. Okay? Now, Warren Buffett was also asked directly about the tariffs, and he got unusually blunt. I ain't never seen him talk like this. He said, trade should not be a weapon. He called tariffs potentially an act of war. He said that when other countries prosper, America prospers. That global trade is not a zero-sum game where somebody has to lose. Now, he did not mention any names, but I feel like, you know, it is what it is. But the context is very clear. And we're going to talk about that a little bit more later on when I get into the geopolitical section of tonight's masterclass. But what I want you to understand right now is that Warren Buffett's concern about tariffs is not a political concern. It is an economic concern. All right. Tariffs raise the cost of goods. They create uncertainty. Right. And uncertainty makes companies hesitate, and they become very hesitant to invest. When the companies hesitate to invest, they slow down on hiring people. And y'all know what happens when that happens. Okay. Consumer spending eventually follows. We're not going to be spending as much as we normally do when everything is fucking high. That's the chain reaction that investors are watching right now. All right. So I'm gonna land this plane because I know y'all probably tired of hearing me talk about Warren Buffett, right? But here's the 3 things I want y'all to walk away knowing from Warren Buffett's meeting. First of all, cash is a position. Patience is a strategy. Do not feel pressure to be in a damn trade just because you got some money available. Stop doing that. Second of all, volatility is normal. Even a 50% drop should be viewed as an opportunity if you own quality companies. Third, the real economy underneath the market is stronger than the headlines suggesting. And y'all, as investors, you need to be able to separate those two things. All right. If you are able to separate those two things, you will outperform the people who react to every breaking news alert. That's your first lesson of the night from Warren Buffett, not from me. Warren Buffett, this is one of the greatest investors who ever lived. Now we can get into what's actually happening this week. I talked enough about Warren Buffett. Did y'all get what I was saying, though? Let me make sure everybody locked in, right? Talk to me, y'all. What's good? What's good? Okay, good. Because it is midnight. That's what's up, Vincent. I've never seen you before. Make sure you hit the follow button. All y'all strangers, stranger danger, stranger danger. Hit the follow button, y'all. I'm loving this, and you want this dashboard. I'm loving this, and you want the dashboard? Just got here, but kinda. Okay. Kim's digital path. Yeah, I'm supposed to give you the strategy, Kim. Get up with me. I remember now. You're not new. You're not a stranger. Yeah, I got you, Be Lovely. I'll create one for you and send it to you. Just inbox me. All right, so look, y'all. Anybody ever heard of the non-farm payrolls? And why does it matter? And how can this be a lucrative event for you? Right? Money all over the place, y'all. You pass $1 million every day, maybe even more, right? I just want you to understand what is non-farm payrolls and why traders stop everything for it. Okay, so every month the United States government releases a report called the non-farm payrolls report. You might see somebody call it NFP for short. All right, so the report tells us how many new jobs was added to the economy last month. Do you understand? This is that simple. The NFP is going to tell us how many new jobs got added to the economy the previous month, not counting farm workers, hence the term non-farm payrolls. It's easy, right? They are not counting a few other categories as well, like private household workers and shit. So the reason that the market cares so much about this number, though, is because jobs are the engine of the entire economy. When people have jobs, they have money, y'all. They have income. And when they have income, what they do with it? They spend it. Who do they spend it with? The companies. And when they spend it with the companies earn revenue. When the companies earn revenue, the earnings go up. When the earnings go up, the stock prices tend to follow, ladies and gentlemen. That is the entire chain, and it starts with one number, the job reports. That is why we pay attention to the jobs report. Are we clear? This is why every major trader, every hedge fund, every institution is watching NFP Friday like it's Friday Night Football. Okay. Now this Friday, May 8th, the April non-farm payroll reports drop. A lot of people are projecting a gain of 60,000 new jobs. Now on the surface, that sound like a lot, but I want to give y'all some context. Because I know some of y'all ain't never paid that shit no attention, right? So the average monthly private sector job gain that analysts are projecting for all of this year is just 25,000. So if we hit 60,000, that is more than double what the baseline expectation for this year was. That's a strong number. That's a strong number. Now, this is where it gets interesting. And this is the part that trip up a lot of beginner investors every single time. You gonna think that a strong jobs report mean that the market go up, right? You're going to think that more jobs equals a good economy. It's going to equal a good market. And sometimes that's true, but not always. It's not always true. So when the economy is strong and the jobs are plentiful, the Federal Reserve, that's the central bank that controls interest rates, it feels less pressure to cut the rates. We know we've been talking about interest rates for about 2 weeks over here. I've been trying to get a lot of people to understand what would happen if they cut the rates and what happened if they don't. So because they only cut rates when they are trying to stimulate a fucked up economy, if the economy is already running hot, looking like it's about to be fucked up, they don't need to stimulate anything. And when the Feds is not cutting rates, that borrowing money, that shit becomes expensive. It stays expensive, actually. The mortgages that a lot of y'all pay will stay high, okay? Interest rates, business loans gonna stay high. The growth stocks, especially technology, those will underperform because their future earnings getting discounted more heavily in a high rate environment. So literally, y'all, I'm gonna give you what the trade is. So this Friday, the numbers come in at 60,000 or better. Expect some volatility. You're going to see a lot of sectors pop. You're going to see some pull back. The bond market is going to move. The dollars might strengthen. So, because I know a lot of y'all trade Forex, so y'all watching y'all watching USD too. But technology could get a little choppy. And if traders start pricing out rate cuts, you can definitely look for some consolidation. So none of this is worth you panicking. You should not panic over none of this information. It is just the market processing information, and your job is to know what the fuck the information means before the number drops, not to react emotionally after it dropped. That is how we operate over here at Ironworth Trading. All right, so let me see if y'all, let's see, what do we got here? I want to talk about what Trump just said. What the hell did this orange peel looking mother lover just say? Trump announced that the United States is imposing a 25% tariff on all cars and trucks imported from the European Union, starting this Monday, May 4th. All right, let me explain what a tariff is for anybody who's been hearing this shit for 2 years now and still confused, right? You've been hearing this word a lot. You're not really sure what it means, so hear me out. A tariff is a tax. All right, specifically, it is a tax that a country puts on goods that are coming in and out from another country. So when a BMW made in Germany arrives at a U.S. port, before it gets sold at a dealership, the importer now has to pay 25% of its value as a tax to the United States government. That cost will get passed on to somebody. And it almost always is the person that bought the shit. So European cars in America just got more expensive, ladies and gentlemen. You got anybody in the chat drive a European car? Who in here drive a foreign? That's so nice of him, right? Right, Kim. So who benefits from this, though? You know, I know a lot of people might be hurt from it, but who benefits from this? Who is making money from this situation? Can y'all tell me who? I want to see if any of y'all gonna catch it, because this is chess, not checkers. Yep. That's right, her. Is it Seiji or Saji? Yeah, you're right though. That's one of them. I can name about 2, 3 more. Ford, General Motors. Yes, CD Petty. Yes. Because Tesla have factories in the United States. Any car manufacturer that builds their vehicles on American soil is now sitting in a significantly better competitive position because their foreign competition just became more expensive. There is also an exemption in the announcement, though. So if a European manufacturer builds a plant inside the United States, they can avoid the tariff. So what are you likely to see over the coming months is European auto companies breaking their fucking neck to announce United States manufacturing investments. This is actually a dub for the American workers. This is a win for American workers if it plays out that way. All right. But in the short term, this creates a lot of uncertainty, and uncertainty is something that the market has to price in. Yes, eclectic one. All right. We got earnings season taking place. Do anybody know? Can anybody in the chat tell me how many times a year do we get earnings from a company? That's right. Tap, tap, tap. That's right. Click at the link in the bio. Tap, tap, tap. Use the first one to drop the foe. Join the Discord. I got something for you. So 4 times a year, once every quarter, every publicly traded company in America is required to report their financial results to investors. They gonna, it's basically their report card. Okay, they gonna release their revenue. They gonna show you how much money they made, how much money they gotta pay on their bills. They gonna let you know where they think they finna go towards the future. They call it the guidance. Their guidance for the future. This period is called earning season. It is one of the most important times in the market, y'all. If you looking at a market calendar and looking at dates and shit, this is important to know when a company got earnings, because it is when the numbers stop being speculation and it start being facts. We're no longer guessing. We get to see if they doing good or not. We get to, that's how that works. So before earnings, a lot of investors are guessing what a company made. During earnings, we find out. It's just that simple. And the difference between what we expected and what actually happened is what moves the stock prices the most violently. Am I clear? Y'all picking up what I'm laying down? Are you picking up what I'm laying down? Are you understanding what I'm telling you? I gotta ask y'all, not only because I want to know, but it helps me with engagement. Also, y'all, listen, tapping is clapping. You feel me? I need y'all tapping while I'm yapping. Press the share button. Share the live out to somebody who needs to learn. They might want to be in the stock market. They might already be in the stock market. But yeah, y'all push me out. Hype me up. Hype me up, twin. Fuck with me. I appreciate you for liking the live, eagerly. All right, y'all. So yeah, I'm glad you understand, Vincent. I'm glad you understand, Be Lovely, because that's all that matters. As long as y'all get it, because you got to know that the difference between what we expected and what actually happened is what moves the stock prices the most violently. If the company meets our expectations or beats our expectations, that's good. Yeah, Kim, all it takes is a 15-minute phone call, I got you. I'll walk you through it step by step, even if we got to get on Google Zoom, and I explain every single room to you and how to use Discord. I got you. Anybody still confused about that, just inbox me and we'll do like a consultation, and I'll help you. I'll help you maneuver through the Discord. No problem. No problem. No problem. No problem at all. Now, if we expect a company to have made a certain amount of money or to be doing a certain level of good, and we expect them to be doing good, and they don't meet those expectations or they don't beat those expectations, that's not good. So we want them to either meet or beat expectations. You will know that if they beat it or if they didn't. They'll say, hey, Amazon beat earnings. They beat the expectations. Everybody thought that they were going to make this much. They actually made this much. That's how that works. A company can have incredible revenue and still drop 20% in one day if the market was already expecting even more. Do you understand? That is called a miss, right? So either it's going to meet or beat or miss. A company can have okay results and jump 15% if the results was better than we thought they were going to be. That is called a beat. If y'all can understand and overstand that distinction, that will be fundamental to your trading during earnings season. So who's still confused about it? Thank y'all for sharing the live. I appreciate you so much. Y'all the MVP. Who's still confused about earnings season? Because right now, as of this week, approximately 82% of the S&P 500 companies have reported earnings that beat analyst expectations. The S&P 500, y'all, that's just basically a basket of 500 of the best stocks in the United States. Okay? It is a folder of stocks. 500 stocks inside of one folder, and those are the best companies in the United States. So Out of those 500 companies, 82% have reported earnings that did better than y'all thought they was going to do. 82%. All right. So last year's full earnings season ended up with a 77% beat rate, and that was already considered a strong season. I'm in Metacall 2 weeks out. Let's see, tap, tap, tap. So this year we are running 5% points higher than that. What does that mean? How can we, look forward with that piece of information? For me, it means that the American corporate sector is performing better than Wall Street's analysts predicted them to. It means earnings are not falling off a cliff because of tariffs. But nobody give a fuck about gas being $5 a gallon. I guess nobody care about the higher interest rates. It means the companies making up the core of the United States economy are resilient. And as Ironworth traders, when we see data like this, we do not let the fear narrative on social media override what the numbers are actually saying. Yeah, gas is crazy as hell. All right, but yeah, 27.8% year over year earnings growth, highest since 2021. Aggregate earnings for the S&P 500 are projected to have grown 27.8% year over year. That would be the highest rate of profit growth since the fourth quarter of 2021. So I don't think y'all get what I'm saying. I think that I need to break it down a little bit more. I'm gonna say it again because I really wanted to land. Corporate America is growing profits at the fastest rate in 4 years, right? In a world where everybody talking about recession fears, everybody think it's finna be a recession, everybody's scared of tariffs and what it's going to do, the economy collapsing and falling the fuck apart. The actual earning numbers, the numbers that we seeing in these earnings are printing the best quarterly growth that we have seen in years. All right, so that gap between what everybody's saying on the news and the data that's popping up is where informed investors find opportunity. Yes, tap, tap, tap. You get it. You hit the nail with the hammer just then. Something ain't right. Something smell fishy. You gonna tell me to go left and everybody going right, huh? Yeah. So that's exactly why we do this masterclass, because you need to know what has actually happened, not just what sounds scary on the fucking news, okay? Now, AI. Let's pay attention real quick, y'all, because this is where you won't be fooled at. We're not playing no games. The companies driving the biggest earnings surprises this season are disproportionately concentrated in technology, and specifically in artificial intelligence, in the infrastructure of AI. The semiconductor companies, the data center equipment makers, the power management companies, the optical networking companies, all of them are printing results that are beating the shit out of expectations with a switch. Braided, dipped in water type of switch. You know what I'm talking about? Real ass whooping type beating the earnings. Feel me? Now, every earnings season, I ain't had to go that deep into telling y'all how bad they beating expectations, but you get the gist. All of them are printing results that are beating expectations because the demand for AI infrastructure build out is not slowing down no time soon. They building AI and it don't matter what's going on. They building data centers no matter what's going on. They need power plants to power those data centers no matter what's going on right now. When they spend that money, it goes to companies like AMD, Coherent, CoreWeave, Lumentum, ARM Holdings, all of them which are reporting this very week. These are not random companies that I just named, y'all. These are the picks and shovels of the AI gold rush. Y'all please don't make me explain the picks and shovels story again. I do it every time I talk about that gold rush analogy. Yeah, because we didn't live to see it. But yeah, apparently some point in time during history, everybody was just finding gold everywhere. It was just, you could dig and find gold. Well, what's the first thing you need if you want to go looking for gold? You need a fucking pick and shovels. The first people to get rich during that gold rush was the people that was selling picks and shovels. Okay? So these companies are the picks and shovels of the AI gold rush. Everybody rushing to get AI. All these companies rushing to use AI. Well, what does AI need to exist? These companies that are reporting this week are the picks and shovels of the AI gold rush. This week's earnings reports are going to tell us whether that build out is still accelerating or if it's starting to cool off. This is a critical moment. This is critical information for anyone with a lot of exposure in the technology sector in their portfolio. Okay. So this week, we got a lot of companies reporting earnings. This is one of the most important parts of the show tonight. So again, y'all, if you're new here, go ahead and hit the follow button. Yeah, the market is we finna see tap, tap, tap. I don't see it consolidating. But yeah, I'm gonna explain to y'all what these businesses do, what each one actually does, why the market care about their earning reports. So Monday, let's talk about Monday. We got Palantir. Monday today. Anybody in the chat fuck with Palantir? Anybody in here made money off Palantir already? Who bought Palantir when it was under $10? If you bought Palantir when it was under $10, let me know. If you bought it under $50, let me know. If you bought it under $100, let me know. Because right now, you up, right? I just want to know. Or maybe you trade stock options on Palantir. Maybe you never fucking heard of it. I got you. Somebody says I bought Palantir at $24. I think I joined. Thank you. I got you, Kim. Even if you didn't, I got you. I told you, I'm going to show you. Even if I got to screen record and do a voiceover, I'm going to help you. Nobody left behind over this way. Now, Monday after the market closes, Palantir Technologies reports earnings. Let me tell you exactly what Palantir does, because I know a lot of people hear this name and they nod like they know, but if I asked them to explain it, they couldn't. And we want to kill that right now. Palantir builds software that takes a shit ton of data. Okay? Government intelligence data, military logistics, hospital patient data, financial data. How do you feel about trading on a Monday? Money has been made on Mondays, Kim. Sometimes I don't. Sometimes I say, you know what? It's not even a cookie cutter answer, because you can make money on a Monday. You can trade consolidation. You can scout. It might not consolidate. I've seen it shoot up. I've seen it fall. I've seen it go sideways. So how do I feel about trading on a Monday? The same way I feel about trading on each one of those days on any other day. The question is, how do I feel about trading at 9:30 as soon as the market opens? That's the better question. I think people should start taking their time and wait and see what it is doing first. And you're guessing at 9:30 if you're guessing. Maybe you have a pre-market analysis you did. That's another story. But even then, you should have a level that you're ready to get in at instead of doing a market order. If you buying in market orders, you probably losing a lot of money. If you are selling using a limit order and your shit probably not getting filled and you wondered why. You wondering why your orders are not getting filled? It's because you need to learn order types. A lot of y'all skip that order type lesson, and that is something that I really want to work with y'all with. So if you need help with that, inbox me. I got you. That's an easy one. That's not too hard. It's not too hard for you to get, and it's definitely not hard for me to teach you. I'll do a whole masterclass on order types again, because I'm pretty sure I've done it 2 to 3 times, maybe not this year already. So I'll go back and do one because it's important to know. I got you, Eclectic One. So again, y'all, that's what Palantir does. I want y'all to think of Palantir. Think of it like a supercharged data brain that helps large organizations see patterns and make decisions faster than any person can. All right. The United States military uses them. The CIA uses them. A bunch of big ass hospitals use Palantir. And now commercial companies are paying for their AI platform called AIP. The artificial intelligence platform. Palantir got an AI platform. That commercial side of the business is the one that investors are watching the most closest right now. The most closest. Yes, I did say the most closest. We watching this shit closely because government contracts are stable but not high growth. If Palantir shows continued acceleration in the commercial revenue, this stock has a lot of hard movement to the upside. Okay, add it to your watch list if you're not already paying attention to it. Tuesday, we have a lot of companies that come out with earnings. Tuesday morning before the market open, we get Pfizer and PayPal. Anybody made money off Pfizer? Can somebody in the chat tell me what Pfizer do? Who knows what type of company is Pfizer? I'm looking for somebody to tell me what sector Pfizer is in. Pfizer. Juju, you been ducked off in the cut. I ain't know you was in here. What's up? Yes, y'all. Pfizer is a pharmaceutical giant. They make medicines, vaccines, oncology drugs. They are still working through a post-COVID revenue hangover, okay? They still fucked up from COVID. They still healing from COVID. This massive COVID vaccine and treatment sales that they had from 2021 and 2022 have normalized. Really, they should have made a lot of money. Yeah, they made a lot of money. They're not fucked up. They made a lot of money during COVID. But investors want to see that their pipeline of new drugs is strong enough to replace that revenue. They should have made a lot of money. They be lying, y'all. Don't take my word for it. I'm not the one I can't even speak for what they making. I go off earnings. But if they show pipeline progress and non-COVID revenue growth, I want to see this company make money off some shit outside of what they made money off the COVID shit. This stock could recover. If they miss and reduce guidance, it could get punished. And as far as PayPal, do y'all like PayPal? No, like honestly, I'm not talking about the stock. Do y'all like the company PayPal? Yes or no? That's all I want to know. I just want to see, do you like PayPal as a company? Do you like their product? Yes or no? We got one no and one yes. 2 yeses. Just quick survey, y'all. And not really. I don't like them at all. I just want to see how many of y'all like the company or the stock, okay? But as far as PayPal, I know y'all know that that's a digital payment company, right? Cool, we know that. The big question is whether PayPal can defend its market share against aggressive competition. Okay, PayPal is a major leader. Terrence, I don't know about that no more. As a business, they held my money. Be Lovely, yeah, they didn't held my money before too. Tap says I like Coinbase. Kim says I'm in Canada, so that's all I have. I understand. But the question is, can they defend themselves against aggressive competition like Apple Pay, Google Pay, Stripe, Cash App, etc.? That's what we want to see. We got all of this information comes out. We gonna know if Pfizer can make money outside of COVID earnings season. We gonna know if PayPal can hold their own up against the competition. And I don't think so either, Juju, for the record. Revenue growth is what we want to pay attention to, and user engagement numbers. This is what the market is watching here for PayPal. Let's move along. Tuesday, after the market closed, we got AMD, MSTR, SMCI, Occidental, Tempest AI, Pan Am Silver, and Lumentum. Okay, those tickers: MSTR for MicroStrategy, SMCI for Supermicro, OXY, sorry, for Occidental, and TEM for Tempest AI. And y'all see it, read them and weep them. So to do after the bell, which means after the market closes. All right, this is the biggest evening of the week. AMD, Advanced Micro Devices, they make processors and graphic cards. They are the number 2 chip company in the world behind the video. Yeah, tap. Did I say Weebull? I don't think, did I? I hope I didn't. I said AMD, MicroStrategy, SMCI. No, I didn't say Weebull. Jabbar says bullish on Tempest. Tell us why. Tell us why 223. Terrence says Cash App is better. Yeah, and I don't like Cash App either, but they better than PayPal. Hell yes. I accept Cash App before I tell somebody to send me money on PayPal? No, I do not like that. But TikTok make us use PayPal, so here we are. You know, when I get my little money from TikTok, yeah, it's strictly on PayPal, so they got some type of deal. Jabbar says he's bullish on Tempest because the demand is too high for testing in oncology space. Good. Now that's a good thesis right there. I like that. I like that, Jabbar. That's a good. Thank you for sharing that with the community too, buddy. I appreciate that. That's high value. Am I pressing the button? Oh yeah, there we go. I'm sorry y'all for clapping and all this extra shit in y'all ear. Now, again, AMD, they make processors and graphic cards. A lot of the time, AMD microchips is in video games and shit like Xboxes and other shit than that. It's used for a whole lot more than video games. They are the #2 chip company right behind NVIDIA. NVIDIA is #1. But anyways, AMD, a lot of people will argue with me on that too. They are aggressively taking market share in the AI data center space with their MI300 series chips. Every data center company that is building AI infrastructure, they need chips, y'all. So when NVIDIA's supply is tight or the price is high, people go to AMD, right? NVIDIA charging too much, people go to AMD. NVIDIA ain't got it, people go to AMD. AMD's earnings report is essentially a real-time status update on how fast AI hardware is spending, how far is the spending growing against the industry. Well, let's say across the industry for a better word. What up, Joe Butler? So if we see AMD beat the expectations that we think they're going to do on earnings, that would validate the entire AI infrastructure thesis. But if they don't do as good as we think, if AMD misses what we expect them to do, that will create a lot of doubt about the pace of the build out. This report has market moving potential, not just for AMD, but for the whole semiconductor sector. So pay attention. I know a lot of y'all don't give two fucks about earnings season, but it's only because you don't know. You haven't made no money on yet off of earnings season. That's why you doing that. You don't know Baby D like I know Baby D. See what I'm saying? Now, MicroStrategy, ticker MSTR. MSTR. This is in a completely different category. MicroStrategy, this is in a different category. This is a company that has essentially made buying Bitcoin their primary corporate strategy. They issue debt, they raise capital, and they use it to do what? Buy more Bitcoin. Joe Butler, you're going to like this one. So their earnings report will reflect whatever Bitcoin has done and whether their balance sheet leverage is sustainable. If you watching MSTR, you pretty much watching Bitcoin with a magnifying glass and a multiplier. Joe Butler watched my live for 100 minutes. Thank you, Joe. I appreciate the support. And congratulations for all the information you done received being here. Now, SMCI, Supermicro Computer. They make the servers and the racks and the cooling systems that the data centers need to run the AI workloads. Did y'all hear me? SMCI, that's an important company to pay attention to. They make the servers in the data centers. They make the racks and the cooling system that the data centers need to run the AI workloads. You better add them to your watch list. They had some accounting irregularities last year that hurt their stock very hard. All right. I've seen a lot of lives and they don't give you that much information. So thanks. Oh yeah, Kim. No doubt. I'm a nerd. I nerd the fuck out over here. We nerd out over here. So yeah, they had some bullshit that happened with their accounting and that fucked up their stocks very hard last year. The market wants to see clean financials and strong demand. That's what we want to see. And let me move forward. Lumentum. Anybody ever heard of LITE? Lumentum. Anybody ever heard of that stock before? And can you tell the rest of the chat what they do? No. Okay. Lumentum, yes, it's kind of optic, Jabbar. Lumentum makes laser and photonics technology that is used in the data centers and telecom And then we got Pan Am Silver right here, the PAAS. This is a precious metals miner that gives us a read on silver demand and production costs. So this is kind of connected to silver. PAAS is connected to silver, of course. Okay. So Wednesday morning, I just gave y'all Monday, Palantir. Tuesday, I gave y'all all of those companies that's reporting before the market opens and after the market closes. Now let's move forward to Wednesday. Wednesday morning is loaded. Disney reports before the open. All right, you Disney Channel characters, you Disney kids in here and shit. Mickey Mouse Clubhouse head ass. Yeah, Disney reports before the open. Disney is one of those companies where every American has an emotional connection. Disney fucked a lot of y'all heads up. I'm just playing. But no, for real though, they got a lot of people connected to Disney, so they'll invest in the stock just off of love. Imagine if Michael Jackson had a stock. You know what I'm saying? That's how I feel about Disney. It might as well be a meme stock, but they got money though. It's worth real money. Disney World, etc. Right? So Disney is one of them companies where basically earning discussions can get clouded by people's feelings. So let me cut through that. The market cares about three things from Disney right now. We give a fuck about streaming subscribers on Disney Plus. Okay? We want to know whether they profitable yet. Listen, we need to know. And we want to know about the theme park revenue. Like I said, Disney World. Because Disney World ain't like it used to be. We want to know the attendance trends. We want to know as a shareholder, did you know you have shareholder rights? You have the right to know this shit. That's why they have to report it. And we want to know whether the studio division is recovering after this stretch that they done had at the box office, because they movies ain't been popping like they usually do. So if Disney Plus shows a lot of subscriber growth, which I doubt, but we're going to see. If Disney Plus shows subscriber growth and moves closer to them finally being profitable, that stock could respond positively. Okay? What up, JoJo? And then we got Uber. Uber reports Wednesday morning as well. Yeah, Uber has quietly become one of the best operated companies in technology. Their ride-sharing business is growing. The Uber Eats delivery platform is expanding, and they are building towards having cars that run themselves with nobody driving them. That's what they working on. So a lot of investors want to see them continue to grow. We want to see them make money, and we want to see them improve their profitability margins. Next up, Novo Nordisk. This is a Danish pharmaceutical company. Can anybody tell me the number one product that Novo Nordisk owns? What do they make? What does Novo Nordisk make? Let's say make instead of own. GLP-1, JoJo. All right, GLP. Can y'all tell us what GLP is? Because a lot of people don't know what that GLP is. Y'all know, but break it down in terms to where anybody can know. What is GLP-1? Novo Nordisk has earnings coming out before the market opens Wednesday morning, May 6th. Wegovy weight loss drug. Yes. And also, they make Ozempic. Has anybody ever... I know y'all know what the fuck Ozempic is and Wegovy. But for the people who don't, it's a weight loss drug to help. It really is for diabetes patients. I'm sorry. So correct. I stand corrected. It is for diabetes patients, but the big backians are using it for weight loss. It's strictly weight loss. I meant to say celebrities and shit like that too. Like they using it to lose weight very fast. Peptides. Yeah. I'm bullish. The stock is undervalued, says Jabbar. I agree wholeheartedly. There is a demand for these drugs. And the demand for these drugs, TikTok, I'm talking about medicine. It has been astronomical. The question is whether can they manufacture enough of these? Can they manufacture enough of them? And is the competition starting to eat into their market dominance? Because there was competition. You have people dropping generic versions of this shit. Thank you for the gifts. Y'all are so supportive. I absolutely love anybody that supports me, y'all. I love y'all. For real. Cause it really it don't take much to support somebody. So everybody that hit the follow button tonight, thank you. Thank you so much. Everybody that tapped the screen, I appreciate you. And if you sent the gift, I really appreciate you. Thank you so much. You helping out the channel. You know, you the reason why I'm here tonight. All right, now what we got? What we got? Wednesday after the market closed, we went over the three that before the market opens. We got Novo Nordisk, Disney, and Uber. Now, after the market closes Wednesday, after the bell brings some of the most watched names in the AI and technology space. We got ARM Holdings. The ticker is ARM. They designed the chip architecture that is inside virtually every smartphone on Earth. And increasingly, they've been putting them in data centers for AI chips. Data center AI chips. So when the Apple makes a chip, when Qualcomm makes a chip, when NVIDIA makes an ARM-based chip, they all pay royalties to ARM Holdings. Pay attention now. Y'all better add ARM to your watch list. ARM. ARM Holdings. Ticker ARM. This shit is in every smartphone on Earth. I don't think y'all hearing me. I don't think y'all paying attention. Some of y'all is. But the ones who not, y'all better be paying attention because it's going to help you. So if you're not paying attention, get the fuck out of my class. And I'm just playing. I'm just talking shit. So look, their earnings are everybody paying these folk royalties. So their earnings are a royalty statement on the entire global chip industry. What else we got? App Lovin', APP. You down with APP? Yeah, you know me. App Lovin'. That was corny as hell. App Lovin' is a mobile advertising and AI technology company that has had a jaw-dropping run over the past year. Based on the AI-powered and they got this AI-powered ad optimization platform. Okay? That was a tongue twister. App Lovin'. Y'all probably never heard of them, but yeah. Investors are watching whether their revenue growth is sustainable or whether it was a one-time acceleration. Is they a one-hit wonder or what? We got another company here called Coherent. I'm looking to move through this, y'all, very fast so I don't hold y'all all night and shit. Because then y'all go to telling me shit like, all right, said, good night. It's been nice knowing you, but some of y'all don't even say good night. Y'all just creep on out. And then some of y'all fall asleep on me and shit, being here catching Z's and shit. Inboxing me talking about some I fell asleep on your live. Fall asleep drooling and slobbing and shit on the pillow in my live. Now, anyways, y'all, we Coherent. Coherent makes optical components used in the data center interconnects. That's why I said this week is an important week in the earnings section, in the earnings sector. An earnings season for the AI sector, for the technology sector. The fiber and the laser technology that Coherent uses, it lets data move between servers at the speed of light. They are a direct beneficiary of AI infrastructure spending. This company that I'm telling y'all about, Coherent, they make money off of people growing with AI. These companies are connected directly to the growth of AI. So I'm not telling you shit for no reason. Yes. Let me pin this, JoJo. Is you naming companies I didn't even name, but yes. And Photonics too. So, and y'all better listen, JoJo know what she's talking about. So, another one I want y'all to pay attention to is IONQ. IONQ. Okay? This is a quantum computing company, which means they are earlier stage and higher risk, but their results will tell us where quantum computing commercialization stands right now. Who else we got? Albemarle. I only know how to pronounce this, and can't none of y'all help me either. So I'm just about to butcher the fuck out of it. Matter of fact, I'm just gonna say the ticker. I don't own any of it, and I have never traded it, but I'm watching them. ALB is the world's largest lithium producer, so their earnings give us a read on lithium prices. Well, let's put it this way. Electric vehicle battery demand is connected to lithium. And the energy transition story. I said it correctly. That's crazy. When is Fiserv earnings? Not this week. Not this week. I know it ain't this week. USAR, yes. MP and USAR. Those are the wild cards of tonight's show. If you don't pay attention, Pfizer. Oh, okay, I'm like, I saw a V at the end. I'm like, who's he? Oh, he talking about Pfizer. Tuesday. I'm like, who is Fiserv? Like, who is Pfizer? Duh. He talking about Pfizer. Tuesday, bruh. that when it was missing that P and the way he spelt it, I'm like, bro, I don't know who the fuck you talking about. I ain't gonna lie to you. But no, y'all, Tuesday morning, before the market open, we get Pfizer. I forgot, Joe, Jabbar, you probably came in a little late. Yeah, you probably came in a little late. Thursday, though, let's move on to Thursday. I went over every company that's reporting earnings on Monday, Tuesday, Wednesday. Let's move to Thursday. Rocket Lab. Rocket Man. Looking at it. Thursday after the close gives us one of the most, I'm going to say one of the most interesting collections of companies in a single evening that I have seen in years. We got Coinbase in the same evening. All of this shit happening after the market closed Thursday. Yes, big week ahead. I'm loving it. I hope y'all bye. You know what I'm saying? Because I'm loving it. Now, Coinbase, the largest United States crypto exchange, this for all the crypto lovers. All right, you should be watching Coinbase earnings after the bell. Their revenue is directly correlated to crypto trading volume and the price of Bitcoin and Ethereum. When crypto is going the fuck up and it's hot and people are trading it actively, Coinbase prints money. When the market goes quiet, their revenue falls off. At the end of the show, I'm going to pull up a Coinbase chart. I'm going to pull up an MP chart and a couple of other ones. But for now, we almost done. Let me get through this Thursday evening. So what the market is watching for Coinbase, we want to know whether their institutional businesses and their international expansion are creating a more stable, diversified revenue base that does not just go up and down with the fucking meme coin season. Coinbase got to show us that they can make money and it ain't just going to go up and down every time Bitcoin going up or down, or it ain't just making money when Bitcoin going up. Sorry, I'm a little confused. Why is it all mapped out weekly? Because these companies they give you their report cards on different days. Like they don't all report on the same day. Right? So Palantir is going to give us their report card Monday. And then, PayPal is going to give us theirs on Tuesday. You feel me? Does that make sense? And so Kim, these, I don't know if I have to go back, but report cards are the earnings reports. Okay? It's called an earnings report. And this is for earnings season. I will briefly go back, because I did explain to y'all in the very beginning what earnings season is. So I'm going to briefly explain for the people that just got in the live stream. 4 times a year, once every quarter is what it's called. 4 times a year, every publicly traded company in America is required to report their financial results to investors. They release their revenue, their profits, their expenses, and their guidance for the future. This period is called earnings season. It is one of the most important times in the market calendar because it is when the numbers stop being us guessing and it starts actually being facts. Right? Before earnings, investors are guessing what a company made. During earnings, we find out. And the difference between what was expected and what actually happened is what moves the stock prices the most violently. That's why I'm sitting here telling you what we're looking for. When I name each company, I tell you what we're looking for. And what'll happen if they meet expectations or miss expectations or beat expectations, because we expect them to be doing a certain way. We expect them to be doing good, or we like how we all expected PayPal to not be doing that well, but PayPal could actually beat expectations and be doing a lot better than what we think. You get it, Kim? Did that make sense? Yeah, I just used a report card for an analogy. They don't really call it that. All right, so where we at? Thursday. Yes. Okay. Cool. So yeah, cool. CoreWeave. I think I went over. Yeah. Coinbase. Let's go over CoreWeave. CoreWeave ticker symbol CRWV. What up, Mizell? Howdy, partner. CRWV. This is one of the most important AI infrastructure companies reporting this week. Yeah, because that's what it is. It really is like a report card. CoreWeave is essentially a GPU cloud company. All right, for those that don't know and you never heard of CRWV, you never heard of CoreWeave. All right, this is a cloud company, a GPU cloud company. What up, Kwame L. Belt? That's my little brother, y'all. So they rent access to thousands of NVIDIA H100 and H200 chips to AI companies that need massive computing power to train and run AI models. They just went public, and this is one of their first major earning reports as a public company. Jojo said every quarter you get an assessment of progress, and don't forget MARA. Do they got earnings coming out tomorrow? I mean, not tomorrow, but this week, Jojo? I don't think they got earnings coming out, do they? Not this. Okay, cool. So yeah, the market is watching this CoreWeave. We want to know if they're gonna have revenue growth. We want to know if we want to see their contract backlog. We want to know whether their capital intensive business model is producing real returns. Basically, are they making money? Okay. Rocket Lab. RKLB. I started there. I should have started there. This is a space launch company that is trying to become the UPS of putting satellites into orbit. That's what Rocket Lab on the mission to do. ASTS ain't on this list because they not reporting earnings this week, but I like ASTS and I like Rocket Lab for that type of space play. You see what I'm saying? But Rocket Lab is a space launch company. I like them. Their Electron rocket does smaller payloads, and their larger Neutron rocket is under development. I ain't gonna talk too much about Rocket Lab because I will nerd the fuck out on y'all. I like rockets. Now let me move forward to SoundHound. Let's move on. SoundHound. Anybody made a lot of money off SoundHound last year? Or anybody lost money off SoundHound? Let me know in the chat, y'all. How y'all feel about SoundHound? Never heard of it? You don't know what they do? This SoundHound AI is a voice AI company. Jabbar says, I'm holding this gem. Jabbar looks at SoundHound as a gem. I don't blame you. I do not know them. Yeah, SoundHound. So MP Materials, the one I was just telling y'all about, they mine rare earth elements, right? Those elements are critical for magnets that are used in electric motors, defense equipment, and Red Cat Holdings makes military drones. All of these companies exist at the intersection of technology, defense, and the future economy. This is one night where you want to be watching the stream. I'm gonna go live. I'm gonna go live Thursday night. we're gonna watch the earning reports together. Jojo says SoundHound is getting its second chance. I probably do it in the Discord though, y'all. It'll be in the Discord, Jabbar. It ain't gonna be on TikTok. Because TikTok be extra. They got too many rules on me. The reason why I be in my Discord is because I can do what I want in there. It's my server. So TikTok can't tell me what to say in there. It's the link in my bio, Jabbar. Go to my main page and just click that link and join. And you don't have to pay shit to join. Just click the link and come on in. I actually got it now to where it's a free trial on there. You can actually get like a seven day free trial to the premium side of it. But it's free to join if you want to just generally join. Now, Friday is an NFP day, a non-farm payroll day. We already broke down what the report means earlier, right? Non-farm payroll. We just want to know how many new jobs was added to the market, excluding the farmers. But I want to give you the practical trading advice, but this is not financial advice. I'm just giving you practical trading advice for educational purposes. Before 8:30 a.m. Eastern time, which is when the number drops, do not have any leverage positions that you are not prepared to hold through a big move in either direction. Okay? NFP can move the market 2 to 3% in 30 seconds. Options traders especially need to understand that implied volatility on broad market ETFs spikes before NFP and collapses immediately after the number come out. I don't think y'all hear me though. I'm gonna say that again, because y'all trade options, right? Y'all the main ones that need to understand. Not all y'all. I know JoJo don't, and a few of my other people in here. Some of y'all trade futures. Some of y'all trade forex. Some of y'all buy overall. You just buy the stock overall, right? But yeah, MP already up over $1.25. I seen that, JoJo. But I've been telling them to fuck with MP for a minute. But just last week, people should have entered that position. But anyways, like I was saying, this is what I want y'all to pay attention to. Implied volatility on Friday, right? How much we expect the market to move is going to spike before NFP, and then after report comes out, after the non-farm payroll report comes out, that same implied volatility will collapse. When the implied volatility is high, can anybody tell me what happens to the premiums on the stock options? What does high IV? Yes, be lovely. Yes, Jabbar. They go way up. Yes, they go up. The premium goes up. The shit becomes expensive, right? And then after the NFP is over, before NFP, and it collapses immediately after the number comes out, the IV collapses. That is called volatility crush. That's an IV crush. That can hurt you even if you called the direction the right way. Okay, so the professional move on NFP Friday is to wait for the initial reaction. We're gonna let the dust settle for 15 to 30 minutes. And then we will identify the real trend direction for the day. Do not be the fucking person who gets caught on the wrong side of the first 5-minute candle, and then you're going to panic exit into a hole. I want y'all to wait, breathe, and then trade. 8:30 Eastern time, Jabbar. You won't even be able to take a trade during that moment. I'm just telling you you might be able to. I'm just telling you to pay attention to when that comes out. I'm not telling you to trade at 8:30. I'm telling you what to watch at 8:30. Again, congratulations. Y'all made it to damn near the end of the show. I can't believe y'all stayed this long. Congratulations. I'm so proud of you looking at it. Now, let me be very straightforward with y'all about the geopolitical situation, because this stuff can seem confusing to some people, but it's not that complicated once you can understand and overstand all the moving parts, ladies and gentlemen. This shit is chess, not checkers. Iran and the United States have been in an active conflict. Looks like a war, but not quite. There is an ongoing diplomatic back and forth happening right now. They are bumping gums, but I don't really feel the gas prices is high. That's all I'm going to say. John Digger said, you keeping it real. Iran submitted a 14-point proposal through Pakistan, responding to the U.S. demands, which pissed me off. Because why y'all submitting a 14-point proposal and using Pakistan to deliver? Like, this shit don't sound like no real war to me. When you go to war with somebody, I know y'all know what a real war look like and feel like, right? I don't even have to be in one to know. Anyways, President Trump reviewed it and publicly said he cannot imagine the plan being acceptable. He also said in an interview that the United States could potentially resume airstrikes against Iran. This is a circle jerkers. This is a fucking shit show. Is it over or not? Every week he say it's over. It's about to be over. The wars could be over at any moment. We have it in control. And then the next week you about to bomb them again. And then the next week it's over. And then the market go up. And then you say you about to bomb them. And the market go down. And then you say it's over with. And the market go up. And then they say you lying. And then the market go down. Like, let's make it make sense, right? This matters to your portfolio for one reason above everything else. The Strait of Hormuz. That little narrow ass waterway between Iran and Oman is one of the most important oil shipping lanes on planet Earth. You got about 20% of the world's oil supply moving through that strait every day. So whenever you got a lot of military tension in that area, oil prices are going to spike because traders start pricing in the risk that the strait gets disrupted or closed. So what do y'all think gonna happen to oil this week? If we gonna have airstrikes and shit against Iran this week, what do y'all think oil is gonna do this week? Let me know in the chat. I'm just trying to make sure I ain't tripping. Because if y'all say what I think, I know I ain't tripping. Okay, Booker. Just making sure. That's usually what happens whenever there's a lot of tension in that region. Go up, so the price of crude oil could be higher this week, Jessica. Yes. The trade data that dropped this week confirmed the United States energy exports surged in April. I'm moving on now. By the way, I'm not even y'all answered it right. I thought Trump said they are opening the strait tomorrow morning. Yeah. You don't have to, when he say that, Jabbar? I don't know. Either I'm actually not. I was about to talk about energy since we was talking about oil, but I'm gonna say that for another day. I really want to close tonight's masterclass with something practical, with everything we just covered, right? The tariffs, the geopolitical, right? Taco, exactly, right. Tariffs is a taco trade. So we talked about a historic CEO transition at Berkshire between my boy Warren Buffett leaving and giving that shit to Greg Abel. We talked about an earnings season running hot. And we talked about the job reports on Friday. How should an iron worth trader be positioned after everything I just told y'all? Excuse me. This is my framework. And this is not financial advice, y'all. This is just me giving you financial education. First, you need to know what you own and why you own it. If you have any positions in technology, you should understand that this week is a binary event week for that sector. Because of AMD, we got ARM, Coherent, and AppLovin. If those reports disappoint, technology will get hit. That's the NASDAQ, QQQ. Now, if they beat, technology gets a catalyst. It'll pump up. Second of all, y'all need to size your positions according to the risk environment. How much dip you put on the chip should be based on the situation. Okay? This is not a week for you to be over leveraged. This is a week that's for you to be precise. So you might need to have a small position, and you need to make sure that you know how much you're willing to lose. Not a lot. If all your losses this week should be very small losses. I tell y'all this shit all the time. How many of y'all actually go throughout the week and make sure that all of your losses are small? I'm talking about under $100 losses. I'm talking about make sure you take small losses. Don't be willing to lose a lot. Why are you willing to lose a lot? To some of y'all, $100 is not a lot. Cool. Fine. But even then, even you shouldn't be losing $1,000 every time. I heard a guy tell me last year, he said, I'm willing to lose $1,000 a day. Well, you sound fucking crazy. You know what I'm saying? Look for how rich you is. I had to get him together real quick. Real quick. Now, again, this is not the week to be over leveraged. This is a week to be precise. Smaller positions, not max contracts on YOLO plays, you know. You only live once. That's the biggest lie ever told. I'm talking about Both of them, eclectic one. Real talk. Both of them. And third, this is the Buffett lesson from the lesson from earlier coming back around. Okay, TikTok, calm down. Keep some cash available. That's the last lesson of the night, y'all. Keep some cash available. Do y'all hear me? Keep some cash available. Not because you expect the market to crash, but because opportunity shows up very fast without a warning. And if you got all your money deployed when this opportunity shows up, you cannot take advantage. Warren Buffett got 330 billion reasons to prove what I'm telling to you. You do not need $330 billion. You just need to have something left in reserve when everybody else is fully invested and panicking. What up, evacuation list? But yeah, y'all, that's where the edge is going to live at. Now, we hours into this masterclass. I want to leave y'all with another thing before we wrap it up. Everything we covered tonight, you know what I'm saying? None of it is complicated when somebody takes the time to explain it to you properly. The financial industry has a vested interest in making this shit seem complicated to you, because confused people do not make their own decisions. In fact, they think everything is a fucking scam because they are still confused about money. They pay fees, they panic, they get taken advantage of. Well, guess what? Ironworth exists to put an end to that type of shit. You do not need to be an Ivy League economist. You do not need 20 years of trading experience. You need a teacher who is going to respect your intelligence enough to explain the whole thing to you. That is what we do here. That is what I do here. So if you're ready to take the next step, if you want to work with me directly, join the Discord, inbox me, get into the mentorship program. The information is right here. Ironworth traders are built different, and now so are you. I'll see your ass in the next session. Maybe. I don't know. Maybe. We'll see.